Moving right up, we have Benoît, Cœuré, BIS, and Neha, MIT, to share with us on CBDCs, the journey forward.
Good evening, Singapore. My name is Neha Narula, and I am the director of the Digital Currency Initiative at MIT. And I'm joined today by my esteemed colleague, Benoît.
Good evening. Good evening, Neha. Good evening, Singapore. I am Benoît Cœuré. I'm the head of the Innovation Hub of the Bank for International Settlements, headquartered in Basel, Switzerland, but based also in Singapore, in Hong Kong, and in Switzerland.
And we are both here today to talk about central bank digital currency, the journey forward. I think what's pretty interesting is that we are both coming from non-commercial institutions. So Benoît from BIS and myself from MIT. We're both here because we want to help central banks figure out this technology, figure out how to move forward, and to determine what might be the best policy for central bank digital currency. So in this conversation today, we're going to be talking about the path forward and remaining challenges. So to start, I'd like to set up the conversation so that we can discuss why CBDC, Benoît?
So it's a great question, and it's really good to have the discussion now toward the end of 2020, which has been a year of great interest for CBDC, and where the CBDC discussion has gained a lot of traction in the central banking community. And it's good to have it at the Singapore FinTech Festival, given the leading role that Singapore has on these issues. So why CBDC? In a nutshell, I would say it's only recently, I would say over the last couple of years, that central bankers globally have understood that change in the payments sector and change in the way money is being distributed and used wasn't incremental anymore, but was starting to be radical. And it started as incremental change through the rise of crypto assets, which are important as stores of value, but which central bankers never really took seriously as a means of payments or a unit of accounts, even less as unit of accounts. And it started also incrementally as changes to the at the front end of the market, changes to user interfaces through mobile payments, QR code, and the like, which are very good for consumers, but are not radical changes for the way money is being moved from one place to another. But all of a sudden, we've seen closed loop systems coming up, stable coins and the like, with a risk of changing in a radical way the way money is being moved from one place to another. And central bank's reaction was we want to be sure that core payment infrastructures, core financial market infrastructures globally will continue to be supported by central bank money, because that's the way we can make them stable. And if we see disruptive change in technology for financial market infrastructures, like custodians or trading venues moving to DLTs, if we see change in the way payments are being used by customers, like stable coins, there is a risk that this new system would be cut away from central bank money and would be therefore less stable. And so that's the whole story. Central banks want to keep doing what they've always done, creating money, acting as lender of last resort, providing stability to the system, and keeping the link between citizens and money through the balance sheet of the central bank. And in this new technological world, there is a risk that this would not be possible anymore. We want to be sure that it's possible.
Exactly. And I think it's really interesting because what we're seeing is this very cutting edge technology. And I'm sorry, I have some street cleaning noise outside, but some very cutting edge technology that is coming up against a system that is designed to preserve stability. And it's very interesting to see the way that these two things marry each other. And so a major question is, will this change be incremental or will it be transformational? And I think the question there is, Will we see simply a slightly faster, slightly cheaper payment system, for example, in the realm of retail payments? Is that what central bank digital currency will produce? Or might it produce something completely different? And at MIT, the way that we're thinking about it is, as a research institution trying to take this long-term view, is there the potential to create something that is more like a protocol for money? So something where we actually have a new way of thinking about the way money is described from a technology perspective, and can that enable a new set of applications? For example, we're doing this meeting on Zoom today, and when the internet was developed in the 60s, 70s, and 80s, we didn't necessarily predict things like Zoom. We didn't predict that we'd be able to work from home in these types of environments. But all of that was based on those original informational protocols, which is very interesting. So one question we think about is can we open that up for money? So is there potentially in the future, perhaps very far out and with a lot of work to do, the opportunity for something really, really transformational in that respect?
I think, Neha, I think that's a very important question where clearly you're leading the discussion, you're leading the conversation. Central banks have been, to be honest, central banks have been slightly defensive, right, dealing with digital currency. They've seen the disruption, they've understood the disruption, they want to remain on top of what they're doing, but reacting to technological changes which are largely out of their reach, which come from the market, as they should. I mean, innovation does come from the market, and that's how it should be. But central banks have been, by and large, reacting to changes coming from the industry, coming from the market. And the question that and we're now reaching a new stage in that journey, where central banks have to ask themselves: is that only about convenience? Is that only about cost and speed? And we can do a lot to make payments faster, cheaper, more convenient for customers, while maintaining stability and safety. And that's what the conversation is about today. But the next step in that discussion should be, how do we make it transformational? Just as you say, how can we use CBDC in a way that where CBDC will be at the center of the new system, of the new ecosystem, while preserving innovation? We don't want to stifle innovation. There is no intention to crowd out any kind of private innovation in payments or in money. How do we have CBDC at the center of the system, spurring innovation and making the functioning of the global financial system easier, smoother, providing liquidity across the board? And you can connect that to ongoing discussions on cross-border payments. For instance, we've seen cross-border payments have been historically based on correspondent banking. As we know, the correspondent banking network has, by and large, collapsed partly because of compliance rules, partly because of cost, and it's not working as well as it should be. And there is a lot of scope to make the international system better, also in terms of financial inclusion and money flows between advanced countries, emerging countries, developing economies, and so on and so forth. How can CBDC help that without stifling innovation? I think that would be the key question for the years to come.
Yeah,
and if I may, Neha, the standard, you're mentioning TCP/IP, and there is a long tradition of central banks supporting standardization in the system, and the latest example being ISO 2021 as a way to harmonize messaging within and across payment infrastructures. And we're not there yet, by the way, in terms of implementing ISO 2021, as we know. So we should complete that job, but also think about the next standards that would be needed across the board and also internationally consistent.
Yes, I think what this really gets to is the differing roles for the private sector and the public sector, which you've started to touch on. The central bank provides money, provides the sovereign form of money, but at the same time, central banks traditionally don't do the innovation. That's for the private sector. And we've noticed in our work with designing central bank digital currency that when we're considering the architecture, there are a lot of different places where one could draw the line between the public and the private sectors in the architecture. And as you point out, having the central bank involved at all is critical for stability. Very important. And I think as well, the central bank has an opportunity to help define the standards, to help be the place where people come together and decide on the standards, perhaps. But how do we think about that question about where to draw the line between the public and the private sectors?
Well, I guess the first answer is that the answer can be different from one place to another. Depending on legal frameworks, depending on social preferences, political preferences, there might be different answers in different jurisdictions. If you take digital identity, for instance, there is intense work on digital identity, setting up identity rails in payment stacks, and it's being done differently in different places. In some places, the identity platform is provided by the government. In other places, it's provided by banks. And it's okay. I mean, there can be different preferences there. So we've got to build a system which accommodates for these different preferences, but still works as a system. And that's where standardization can be very important to make sure that even though these systems will be different, cross-border payments will be possible. So I think what will be key to the BIS work, in particular to the BIS Innovation Hub work, is to identify the key prerequisites in terms of international consistency that we want to see to have these different systems work smoothly together. Because we don't want to add fragmentation to the global financial system. It's fragmented enough already. We don't want that. We don't want CBDC to add to that fragmentation. Maybe one last remark here is that at some point we might hit a wall because some issues will just be too political. So at some point, issues related to privacy, data control, or data ownership will have very different answers in different places, and that might create real hurdles to international cooperation and international consistency. And we have to face that at some point the discussion becomes political.
Yeah, I think that's a really key point right there, which is that different countries are going to have different value systems and will build different types of central bank digital currency. And that's how it should be. That's really important to note, is that it won't be a totally homogenous system. However, we want to make sure that we have the things in place to make sure that different systems can interoperate, especially for the very important cross-border use case. And I think as well, sort of thinking about this public sector, private sector question, putting some of the work in the public sector and having the central bank run perhaps some part of the system can actually help with competition, with standardization, and can help reduce fragmentation in the long run, as you said. And so that's also very important to note. People often ask, how does central bank digital currency fit in with cryptocurrency and with stable coins and with things like that? That's another very important part of the private sector, in addition to the traditional banking system. And I think what we're seeing is that the cryptocurrency world is like this laboratory. People are experimenting, they're developing really interesting ideas, they're developing new ways of securitization, of lending, and new custodial forms, programmability. And it's going to be really interesting to see what makes sense from there to pull into the central bank digital currency world, where we really, really have to put stability and security at the forefront. We can't simply sort of, experiment in the way that we might be doing in the cryptocurrency laboratory. So that's also going to be, how do we bring those lessons over to the fiat world safely, right?
I totally agree. And at the same time, there is a lot we can learn from the crypto world. Not that much in terms of the architecture. There are key principles of public architectures that we want to keep. Like, as I said, core infrastructures being settled in central bank money, which for us is an important principle. But from a technological standpoint, there is a lot we can learn. We've learned a lot from the stablecoin discussion. We are learning a lot. If you take DLT platforms, which are not the only ones. I mean, there are lots of options without DLTs. But if you dive into the DLT discussion, we are learning a lot from what can be achieved through atomic settlement in terms of connecting different platforms, etc. We've got to learn as much as we can from what's happening there.
Absolutely. And so, this is a very quick conversation. There's so much that we could say when it comes to central bank digital currency. We could dive deeper into the privacy question. We could talk about some of the legal questions as well. But, in our final sort of 5 minutes here, how do we think about the remaining challenges? How do we go forward? In particular, I want to think about both from the policy side and from the perspective of answering questions there, and also on the technology side.
Look, there are many known unknowns, and also quite a lot of unknown unknowns, I guess, when it comes to CBDC. I think a challenge for us will be integration into live systems. There is a lot of experimentation all across the globe. We are at the BIS Innovation Hub. We are doing our own experiments. We've just published a report on how to bring central bank money to a DLT trading venue and custodian, the Helvetia project, and we'll do more. But the key discussion is how do we ensure end-to-end consistency? How do we integrate all these prototypes and POCs into live systems, which have to be very secure, very resilient, operationally robust, and robust to cyber threats. And I guess that would be the next stage of the discussion. Once you have a good grasp on the kind of technology you want to use and the kind of architecture you want to see, how do you make it robust? Especially when it comes to retail CBDC or general purpose CBDC. I mean, citizens want to trust their wallets, right? They want to trust central bank money. They want to feel safe when they have a wallet, and we're not yet there, honestly, in terms of the operational resilience, robustness to counterfeiting, cyber resilience of all these architectures. So I see it as a considerable challenge, and that will probably, and I would probably conclude that retail CBDC is more far away than you would think, or listening to the global conversation. There is a lot of excitement and enthusiasm, but central bankers are very conservative and cautious people, and we want to be sure that it works. We want to be sure that it's robust, and we want to be sure that it will be safe for citizens, and that can take quite a bit of time.
Yeah, I think it's really interesting, actually, because this is again a place where we're seeing the technology really bump up against the need to maintain stability. When we're talking about money, when we're talking about the global financial system, there isn't really room to make mistakes, right? And that's what's been so interesting to me as a technologist. I'm very used to settings where we can experiment, where we can fail. If your tweet doesn't go through, if the page doesn't load, you can tolerate a certain amount of that, and the system can go on. And in fact, you need to have a certain amount of that, or you aren't even moving fast enough. And it's really interesting to see that come up against the global financial system, and thinking about money, which needs to be very trustworthy, very secure. If people start to lose faith in money or in the system that's providing their payments, that can have huge ramifications that go very far beyond an app simply not working or something like that. So balancing these two things, I think, is truly challenging. And we have to realize that the technology is not done yet. It's not simply a matter of grabbing a system off the shelf and plugging it in here. It's always been our position that the policy, of course, informs the technology, and we should choose technology based on what we decide in terms of use cases. But it's also the case that what the technology can actually accomplish will affect the way that we think about policy. In our projects, we're thinking about, if we want to be able to provide such and such functionality, what impact might that have on throughput, on resilience, on latency, and sort of helping to surface these trade-offs, helping to surface these questions for policymakers so that they can make informed choices about the technology. And I think in realms such as privacy, for example, there's still a lot of remaining work to be done in the technology arena to determine how to achieve, for example, privacy and compliance.
But if I can return you the question, Neha, I mean, what's the biggest challenge you see in terms of what's the roadblock you see that would prevent you from moving on, and that where you would like to put out of the road?
That's a great question. So I think that there are things that will take time, but I have a high level of confidence that we'll be able to achieve them. For example, building something that is very resilient and very secure. I think that we can get there with given enough time, that at the same time can still achieve the throughput and latency we need for a retail transaction system. I think this question about privacy and compliance is much more challenging, especially given the way that we currently regulate the financial system. It's really going to be challenging to figure out, and just seeing the way that the world is changing now in the way that it's thinking about privacy with respect to large tech companies. How do we sort of build that in at the beginning with our financial transactions is still really an open question.
So I guess we've come to the end of our discussion, but there is the way we like to put things here at the BIS is we want to move fast, but we don't want to break things, right? So we'll move fast, but we'll be careful not to break things.
I think that people will appreciate that. Thank you, Benoît. It's been a pleasure.
Thank you, Neha.